To be a successful trader, you need to learn how to manage your risk. In today's video, I'm going to share with you a new approach I learned recently from the CEO of the 5%ers. I'm also going to show you how I've adapted it to suit my preferred way of trading. In return, all I ask is you hit the like button, hit the subscribe button to support the channel, and I'll keep on getting videos and examples like this out to you guys. Let's get busy. Okay, first let's have a look at the video in question. We're going to have a look at the dashboard. I'm going to show you the clip. I'm going to show you the receipt.
Show me the receipts!
I'm going to show you the performance. And, then we have a little talk and a review of it. And then we move forwards. And I'll show you the actual approach with the risk management. And then I'll talk to you a little bit on my approach and how I have adapted it to suit my preferred way of trading. Okay, so let's start with this video first.
Down $400 until I reach that 320. And then the idea is that this is the chart, right? I started this one. I started at September, and then you can see the increase of the chart. I know for myself on my personal account, and like I said, I've been trading for a while, and also on other funded trading accounts that we have on Tradepool or even the Fivers. In most cases, you won't see a chart like this, right? You will see a lot of choppiness, maybe some trends. And in my case, because I'm handling it that way, the way that I just showed you about the risk management part, I'm right now at 89% of success rate, because I'm giving the trade the chance to work. I'm not risking too much at the beginning, and that could, and if I'm right on the area that, like the level that I want to trade, and in most cases I will, because, and I guess most of us can, because at the end we're talking about supply and demand areas, so it's easy.
All right, so let's talk about this a little bit. There's a few things I took away just from this small segment. Now, this is a long video. I will leave the link in the description of this video so you could check it out. But this little segment taught me a lot, okay? So it talked about his approach. It talked about, which I'll show you in a second. It talked about, you can see here his dashboard is very clean. It just rising steadily up. It's taken lots of trades. It's taken about 4 months to get to this stage. So it is quite long, but it works. It has a high win rate and it's slow and steady. You can see there's no massive spikes. It's no inconsistency. His trade is just a steady trend up. And I really like that. When I saw that, I thought, okay, wow, this is different. I've never seen this before. Took 4 months. I don't really like that too much. And then the other thing to consider, to be able to trade like this, he's built up a lot of experience. He's been trading for over 17 years, and this is his approach. So that tells me something, that after 17 years of trading, a slow and steady approach is still the best thing. So I've taken all that on board. I had a look at the next segment I'm going to show you guys, and then I decided that this is something I needed to incorporate into my approach when it comes to trading and when it comes to risk management. So let's have a look at his actual approach when it comes to risk management now, and then we'll talk about my approach in response to this. All right, so what we're going to do now is have a look at the breakdown with his risk management approach, how he allocates his risk based on the daily loss that he's given himself. Now, if you're using a 5%ers trading account, some of those accounts will have a daily loss of maybe 3% or 5%, depending on the account. He takes that number and he then breaks it down. So I'm going to show you quickly, just a little bit of it, because this is, again, a very long video. I'm trying to keep this short. I'm going to show you quickly his approach with his own words on how he takes it into account, how he approaches the whole risk management thing. And then we're going to talk about how I've taken this knowledge from an experienced trader who's been trading over 17 years, and I've adapted it to suit the way I scout.
I have $1,000 to lose in a day, right? Let's call it DL, daily loss. So instead of risking the full daily loss in one click, what I would do is say, okay, I'm willing to risk 30% out of that $1,000, 30%, right? So $300. I'm willing to lose per trade if it's the right trade, right? If it's a A+ setup, it's a great setup. I'm feeling very comfortable to take that trade. What I will do, instead of risking $1,000 right from the get-go, I will give myself the buffer of 30% risk per trade. In that case, 30% is $300, right? Second thing I will do, instead of just going all in and risking the $300 right from the get-go, what I'll do is basically break it into chunks. So that's scaling in or scaling out of the trade, right?
Okay, so I forgot to mention this. I have mentioned it in previous videos. So his approach is trading with support and resistance. He gets into a zone. He doesn't worry about what candle patterns are printed. Once it gets to the zone, he starts buying or selling. And this risk management approach allows him to get in multiple positions to build his position based on what he's seen. And then when price moves into his direction, he will then close his position. So therefore, he could take multiple small entries. And the way he calculates this entries is what he's discussing now. So at first, daily loss, he looks at it, he takes 30% of that, then he takes 10% of that, and he breaks it down into further chunks. So every single trade he takes into account is only representing 10% of that initial 30%. So $300, 10% is $30. So every single trade would be equivalent of $30. So the way he then allocates his lot size is a bit complicated, but I do understand it, and I'm going to show you how I've approached it. So let's just finish listening to what he's got to say, then I'll show you how I've adapted it to myself.
So when you hear the term scale in, that basically means that you're breaking that $300 of risk into few chunks. In most cases, depends on the setup and depends on the general sentiment of the market. Because I'm trading mostly the Nasdaq, I will start by getting into a position with a 10% or 20% of that risk. So you know that you're not risking the full $300 that you're willing to lose in the first place, not by one click, right?
Okay, so I'll just fast forward it a bit. I mean, I think you get the gist of it. So we've got 30%, $300 he's willing to lose that day. Then he breaks it down. This first entry represents only about 10% of that daily risk he's willing to lose, right? So it represents about $30. So the zone he's trading, he doesn't use a stop loss. He uses a mental stop loss, if you like, based on the zone. So the top of the zone or the bottom, he's getting in at extremes. So getting in at highs or, real lows, new lows kind of things. And he's then risking a certain amount so the price doesn't go past that. So he does his calculations and so on, and then he risks the equivalent. So I think this account, this is a $160,000 account. He was using roughly about 0.2 lot allocation per trade. So that's how he calculated it. So I took all of this in. I had a look at what I was doing. I thought, okay, let me see if I could adapt it to my way of scalping, because this obviously works. It has an 89% win rate. He's been trading for 17 years. Some of you who've been in my comments are talking about how you use a negative risk reward ratio, but you focus on not being greedy. I found all of this useful, and I decided to adapt it to my way of trading. And I decided to share this with you guys because I think you'll find it useful as well. So if you do find it useful and you've been watching my channels, if you watch my channels once, okay, cool. Welcome to the channel. If you've seen it 2 times or you've seen 2 of my videos, again, welcome to the channel. If you've seen 3 of my videos and you're not subscribed,
What more do you want from me?
guys, I don't know what's going on. Stop lurking. Support the channel, hit the subscribe button, support the channel, keep on getting examples out to you. But I found all this quite useful, and I've actually adapted it to the way I trade. So I'm going to show you now how I trade based on this useful information that I received. So what I'm going to do now is show you guys how I have adapted it to my own style of trading. So I'm going to show you quickly a trading plan based on some numbers. So if I have a 20K account with the 5%ers or a 20K account period, and my objective is to reach 10% of that 20K, that's $2,000, right? 6% maximum stop out, $1,200, and 3% daily loss, okay? So that 3% represents $600. We're going to now break it into chunks, and that's what was suggested in the video, okay? So 30% of that $600 is $180. That would be what I am willing to risk per day. So what I decided to do is to take that $180 at the maximum daily loss and break that into something uncomfortable we're losing per trade, and that would be $100. Okay, so that represents roughly on this account size 0.5%. So $100 loss per trade. Now, most of you know how I trade. I trade using a negative risk reward ratio. That's what keeps my win rate so high, 80%. So using a negative risk reward ratio, I use a maximum of 2 to 1. So I'm willing to risk, for example, in terms of pips, 20 pips to get 10 pips. So using a negative risk reward ratio and using an equivalent of $100, so the lot allocation would be 0.5. So if you times that by 2 or 10 pips, 0.5 is $50, times it by 2, that's $100. It means per trade, if I'm using 0.5, I'm only risking $100 per trade, right? If I win it, I'm only going to win $50.
Bruh.
So $50 isn't a lot per trade. And a lot of you will look at this and thinking, you know, if you have such a high win rate, why are you just aiming so low? And it's true. I actually normally aim for a lot more than this. I usually risk about 1%, try to make 0.5%, right? So risking $200, try and make $100. But what I'm trying to do is learn. I'm trying to take this new approach, adapt it and implement it into the way I trade because I'm looking for the long run, people. This is a marathon. I'm here for the next 5, 10 years. I'm happy to trade and I need to learn how to trade consistently. Now, all of this is quite interesting to me, and I'm someone who likes a challenge. So I decided to start a new account, risking 0.5 per trade, and to slowly and patiently build my account to see if I could progress through using this new approach with risk management and see how long it actually takes to be able to hit the 10% profit target. Now, this is going to require a lot of patience. It's going to require a lot of discipline. So if you want to support the channel, you know what to do. This is Patrick signing out. Until next time, peace.